Hi, everybody. Good Friday to everyone. Hope everybody's doing well. We're going to give it a couple of minutes for folks to jump on. And given today's Good Friday, we might have a smaller group of folks. Hey,
Good morning.
Latrell, how you doing?
Good, good.
Good morning, Victoria. It's Evelyn.
Hey, Evelyn, how are you?
Good, good. Happy Friday.
I know. We're finally in April. I hope the weather is going to start to get warmer and longer days.
I know.
um, let's see. Okay. So while folks are jumping on, today's topic is, applying for a small business loan. And I'm sure many of us have kind of gone through that. So we'll definitely talk about that. But one of the things I would love to be able to do is maybe, use today's call to get into, people specific business issues, perhaps outside of the business loan topic. So just keeping that open. And as you know, this is supposed to be very active. So please feel free to, jump in and ask questions, and nothing better than getting into a discussion around things. So with that said, Michael.
Hi there.
Hi, how are you?
I'm good. How are you?
Good, good. Happy Friday.
You as well.
Thank you. So I know folks are jumping on, so I thought we'd kick off today's call as we normally do, perhaps with a story. And, April is going to be kind of our financial, theme month. So anything that comes to mind when it comes to being an entrepreneur and, finances, and any stories that you think.
Yeah, it's not so much a finance story, but it just reminds me of something. The other day we were talking about, I'm from New York City. I live in New York City, and early stage companies like we were back in our early days, always think about money, right? Every dollar and where you're spending it. And I finally went out and hired a pretty sophisticated marketing firm that was a bunch of Chicago-based executives, all who had left big advertising agencies. And I finally wrote that big check for taking our brand to the next level. And one of the things they would do is redesigning our whole image. And one of the things was some logos. And we went in and designed some logos, and part of what we were doing, it was a reward business. So it had corporate rewards. So like a CR, and we saw some things, and we decided on one that had, it had an interlocking CR on it. Really liked it. It was perfect for what we were doing. And I was walking down the street in New York City, and I passed by the New York Health and Racquet Club, and which is, a New York gym. And there was the awning in front of the club, and it had this interlocking CR on it. And this marketing firm that we had hired to pay and paid lots and lots of money had basically stolen it from the New York Health and Racquet Club and just literally changed one thing about it and took that logo and said to us, "This is the logo that you should have." And I was like, we had, think about when you spend a lot of money, right, for your marketing firm. And I called them up and I said, "Guys, where'd you come up with the logo?" And then eventually they admitted, and I was like, "Oh my God, you're an entrepreneur and you finally wrote the check. You're paying them something like $15,000 or $20,000 a month to do all this marketing stuff." And they literally stole the logo from off the awning of a New York Health and Racquet Club. So, we all have these kind of crazy experiences about money that, needless to say, they didn't stay to our marketing firm for very long.
Entrepreneur stories you can't make up.
Can't make them up, right? Totally.
Thank you. Okay, so as I mentioned, folks, today's topic is about, applying and obtaining a small business loan. And we can certainly, talk about if anybody has, applied for the PPP or any issues or, that process. And like I said, happy to get into kind of other business related issues so we can take advantage of the hour and help you guys across the business areas. It's all yours, Michael.
Great, thank you. Okay, so let's talk a little bit about, the small business loan process. I'm going to talk a little bit about sources and a little bit about the changing dynamic. A lot of the comments that I'm going to have are going to be, what do you have to do to set yourself up to do that? But I want to couch that ahead of time by saying that these days more than ever, not just as V mentioned, the PPP, but also all kinds of different creative loan and grant programs that have criteria that are very different than were before, meaning that in many cases, if you go back pre-pandemic, loan criteria for early stage companies are really hard that you have to meet. And I'm going to go into that the way a bank traditionally thinks about this. But in addition to that, there are now more and more sources of capital that are really more well designed for early stage companies. And those sources of capital are grants. If you had said to somebody pre-pandemic, hey, should I go get a grant? Most people would say they're really hard to get. You get $3,000, it's for all this work. Now, there are grant programs in every city, every industry, lots of locations. So one of the things I would definitely encourage you to do is to just kind of look for grant programs in your industry or in your location. Because sometimes there are lots of organizations, both banks and charities and others that are literally giving away money. We just had a client of ours get $10,000 in Milwaukee to build their business. So great to know and great to take a look at. Secondly, there are companies out there, some of the large banks, some more innovative banks are trying to create more flexible lending criteria than the ones I'm going to share with you now. So a lot of the banks now, they're trying to be innovative, like they're trying to lower the credit requirements and make it easier for companies to get loans. So it's getting easier. For those of you who applied, it never seems easy. And that's going to be based a little bit on what I'm going to tell you now. We would like to hear, as Victoria said, anybody who is in the midst of applying for a loan, looking for a loan, and even if it's not a loan, but going out and raising money, right? They're related because a lot of the foundational things you have to have, are the same regardless of the dollars that you're trying to get. Okay, so let's think of it this way: a traditional bank would say, well, we would like to have 3 years of financial statements, and we'd like to see you be profitable for 3 years and growing. Well, I don't know about you, but that doesn't describe any early stage company, right? No early stage company, when they get started, has 3 years of profitability. And many people would argue that if you have 3 years of profitability, you probably don't need a bank loan, right? So, but the ability to get bank loans, if you're not in the world of equity financing, there's a couple of things that banks look at. So the first thing I mentioned was 3 years of financial statements. Whether or not you're 3 years old, what you're trying to do to show to a bank is, number one, you have a growing business, right? So they're trying to see a trend over time about how you're doing. But number two, that they also want to see that you have financial discipline, right? So companies that don't have financial statements, right? It's very hard for a bank to get their arms around the fact that if I give them a bunch of money, right, that they're going to do well with that money. Now, we could all argue and say, well, the reason why we don't have financial statements is because we can't hire finance people and our accountant's too expensive and all that type of thing. But what I would say to you is, if you're somebody that's going to go out and get financing from a third party, you've got to put in place the ability to have the basic financial statements that you need, and ideally for multiple years. Okay. Victoria, let's make sure, we did a session a couple of times ago on the basic financial statements that we recorded. And so we'll make that available to everybody so you can go back and take a look, but it's income statement, balance sheet, statement of cash flows. And you need to be able to have that for ideally multiple years. Now, some of you are saying, I've only been in business for 6 months. You have to set the foundation to do that, to be successful at getting a bank loan. Okay. Or frankly, any kind of syndicated financing. Maybe for a small grant, you might not have to do that. But for any significant financing, you're going to need your financial statements to be in order. So you say to yourself, okay, how do I do that? Right. One of the first ways to do it is to go and get, one of these basic accounting packages. right? And we've got a link in the learning community about ones that are recommended, but they're Wave and Zero and FreshBooks, and a lot of these packages are I know for some of us, having a financial package or an accounting package seems, like, oh my God, it's expensive and it's hard. It is neither expensive or hard, right? First of all, a lot of them are free. A lot of them are a couple of bucks a month, right? And they give you everything online. And I want to just give you a little bit of an instruction on how to use them. When you think about financial statements, right? Financial statements predominantly are like an income statement, what you sell and what your expenses are largely a function of just putting in invoices, right? And recording sales and recording bills, right? So when you do that with discipline throughout the year, right, you press a button at the end of the year and you're 90% of the way there. So when you use these accounting systems, when you sell things, right, you create invoices, right? And those invoices are pointed to certain accounts, certain income accounts. So let's say you sell books. I sold 1,000 books. I create an invoice to whoever I sold them to, and it points to an account called book income, and that automatically starts to happen, okay? So it's a great place to keep invoices. And frankly, there's a lot of people out there that do invoices on the back of a napkin, right? You have a little form, right? Back in the old days, these are all things that can be done out of these accounting packages. So they really help you operationalize your business. Secondly is expenses, right? Creating bills, right? You create a bill in the accounting system, it automatically rolls up, not automatically, you have to just make sure it's pointing to the right expense account, right? But if you do that every day, right, when you create these bills, you're a good part of the way there. And the other thing that's super important is integrating them with your bank accounts, right? So let's say, for example, you've done the work to set up a separate bank account or a separate debit card for your business. Almost all of these accounting packages allow you to integrate that so that when you do transactions in that account, they automatically go into your accounting system. Okay. So I know this is a very tactical thing, but you say to yourself, okay, I got to have 3 years of financials. I've kept this on an Excel spreadsheet. That's the kind of thing that freaks a bank out because they're like, okay, it's an Excel spreadsheet, but there isn't anything really behind it. And it makes getting a bank loan more and more difficult. So again, what financiers are looking for is they're looking for people that have their financial house in order. Okay. Of course, you can rely on your outside accountant, but a lot of times your outside accountant isn't with you day to day. There's kind of outsourced bookkeeping services you can get, but take the little bit of time, and we're happy to help you. Take the time it takes to put in place one of these packages so you can create that discipline. Remember, if you're going to go for financing, you want to start to have conversations with organizations so they get to know you over time, right? While relationships aren't the ultimate arbiter whether you get financing, they certainly help. Okay, they're still going to look at your business, but they certainly help. So if you're thinking, okay, I want to be able to go get $100,000 loan, you want to go in, meet with bank officers and say, or other financiers and say, listen, here's where we are today. I'd like to keep you, informed about how we're doing with our business, right? And this will be stuff that will, over time, you will see us go from we sold 1 banana to 2 bananas to 3 bananas. And it shows the trend over time of, wow, okay, this person told me that they're going to grow, and now I can see in their financial statements that they are growing. Okay, so these are foundations, right, that have to ultimately be put in place. Let me stop there. Any questions? And also, is anybody right now actively, everybody needs and wants money, right? But the question is anybody out there kind of noodling through this, trying to figure this out right now and thinking about, going to a bank or maybe even going to investors that wants to raise their hand and ask a question?
Wanda.
Good morning or
Good morning.
afternoon, and thank you. Happy Good Friday. Appreciate this opportunity. My husband Larry and I own a complete car care franchise. It's called Auto Lab, and we hire a lot of, I want to say politically correctly, ex-convicts. We hire veterans, folks, we call them alley mechanics. They want to learn and grow and share. So we're excited about that. My husband and I are acquiring the company. And Therefore, there'll be opportunities for franchises and such. So yes, I'm an African American female, and just wondering, where do we go? Because yes, we are actively seeking. We actually have qualified for an angel investment tax credit in the state of Illinois.
Yep.
And so there's a myriad of opportunities. It's almost, overwhelming right now.
Sure.
I do appreciate this direction and guidance, and thank you for taking.
So you're looking for financing to acquire that business?
Absolutely. Yes.
Yeah. Is the business, so a financier and their ability to give you money is going to be based on the quality of the business. Is the business profitable?
Absolutely. Yes.
Yeah. We should talk offline because, when you come to the table with a business that's got positive earnings and positive trends, there's a lot of financial institutions that are interested in financing those. One of the decisions you have to make is the decision between getting debt, like a loan, or getting equity, right? So obviously you get a debt, you're not giving up a piece of the business, which when you acquire franchises is particularly relevant because typically the franchisor is taking a piece already.
Exactly.
Or equity, where you're not giving up a piece of the business. And so let's talk about it offline. I mean, that's a good example, everybody. Like when you have a business that already has earnings, is making profit, that's a much easier sell, obviously, especially going to a bank. But yeah, we should talk about it offline. But it's the bank and the investors are always looking at the quality of the business, right?
Yes.
In terms of profitability and the like. So
thank you. Shall I just send a note via chat for my contact information? I don't want to be.
That's great.
Yep. Jamara will reach out to you shortly and we'll grab your info.
Feel free. Now, just so you know, that's just a different type of bank loan. It happens to be to buy a business, right? But again, if they're investing in your business, they're looking at, am I going to give you financing because I believe that you're going to be profitable and produce cash flow and be able to pay off the loan. In this case, they're just looking at it for financing a different purpose. I want everybody to understand that I'm sure if we went through the roster of people here, some people would say, I spent my whole life in accounting. Most people would say, man, this seems like a foreign language. There's good reason for that. This is complicated stuff. What I would say to you is, regardless of the type of financing you're going to getting in place those basic financial statements and getting in place the rigor of how your expenses and your invoices and your money flows is a necessary condition. No one other than these grant programs will give anybody financing if they don't say, hey, you have an interesting business, send me your financials. If you can't do that, nobody's giving you money. Okay, so what steps do you have to take to do that? Don't feel like you have to figure it out on your own, right? There's people like us, there's consultants, there's other people, there's outsourced accounting people that can help you move towards, getting your house in order. And you need your house in order as your business grows anyway, to be able to do these different types of things. I know that there's a lot of people who are like, yeah, but I scratch my expenses on a napkin. Nobody gives money to people that scratch their stuff on a napkin. So you can scratch away, but it's just not going to get you where you need to go. So don't worry about that being something you have to do in a day, right? You could say, listen, I'm busy. We're trying to run the business and grow the business. Times are challenging. We know, let's over 90 days, over 180 days, we're going to chip away at this. And then what do I need to do? And you set that was one of your goals for your company. And you say, listen, 6 months, we're going to have our financial statements in order, right? And you build it as a priority, just like you do any other initiative within the company. Okay. It's hard stuff. I know. Yep.
And we've had some really good questions come in, so I just want to make sure that we allocate a little bit of time to answering. So first from Latrell, I just want to make sure we put those out there. How can a company get back on its feet after COVID has destroyed the business? Do you want to answer them one at a time, or do you want me to read them and then?
Let's do them one at a time. Okay. Common problem that obviously a lot of people have been affected. I would say number one, you got to look at your cost structure. This is not groundbreaking, right? You got to look at every dollar and you have to renegotiate, rework, rechange. If you think of it this way, if you were selling $10 before and your costs were $7 and you're
Yes,
making $3,
on a Zoom.
right? You were making $3, right? Now you might have to say to yourself, okay, I'm not going to sell 10 anymore. I'm going to sell 6. How do I make the same 3? Well, I've got to get my expenses to 3, right? So you have to literally look at every single expense, make sure that you're only spending money on the things that are most important. And at the same time, reworking and being creative about how you rework employee costs, right? Rework how you pay for things. If you pay for insurance, where last year you paid for it all up front, right? And they give you a financing program where you can pay for it over the course of a year, right? Yes, you might pay a little bit more in interest, but at least you're not putting out all the money up front. So on the expense side of the business, you got to rework it. And by the way, in our entrepreneur survival guide that's in everybody's platform, there's a ton of stuff on this. There's on expenses, all this different type of stuff. The other part of it, obviously, is the revenue side, right? And how you have to rework the revenue side. And that's obviously a little bit more of a deeper conversation. The one thing I would say is this: don't necessarily look at the audience you were selling to before, because a lot of those audiences, whether they be consumers or businesses, they've been hit, right? So when we work with somebody that sold their solution to schools, right? Well, schools have been decimated financially, right? But they were providing tutoring programs. One was providing an education, one was providing an athletic program through schools. Like, the kids still need it. In fact, moms and dads who are at home may need it even more, right? They're just not going to get it for free from the school. Now, if you go to parents that maybe can't afford it, that's not the way to do it. But could you go to parents that are more affluent, that still want their kids to be able to have these types of programs, but they're not going to get them through the schools anymore because the schools can't afford to do them. So when you think about, where do I go with my product and service, don't think, I was serving these 100 customers before and now I have 60 of them, so how do I have the 60? You may have to go to a different customer, the ones that are doing different things. So people that were building houses before, right? They might be building offices because more people are working from home, right? So you have to think a little bit, not just about what you were doing before, but who are buying and what are the trends, and how do you think about those trends in buying? So long conversation, but glad to answer.
Great. Thank you.
Thank you.
Michelle, hopefully that helps a little bit.
Yes, it does.
Great. All right, next one. I'm just starting out and have not applied for any loans. Are there advantages to obtaining a loan versus funding myself?
At an early stage business, you definitely want to get the foundation set before you go out to other financing. Obviously, it's your money. If you have something that's really a big vision, if you have the next Uber, there are many, many companies that go out and look for financing day one because they have a bigger vision and people can fund into that vision. That is usually not loans. That is usually equity financing. Those are venture capitalists and angel investors that are many times interested in investing in companies early, even before they have revenue, right? If you don't have that type of business, if you said, hey, listen, I've got a unique business and a unique idea and unique skill, but it's not, something that, angel investors or others would invest in, it's better to set your own foundation first. Banks and other folks are not going to lend to companies that are just starting out if you don't have a little bit of a track record. That's where some of those grant programs can be helpful and kind of get you off the ground. And people are trying to solve this in different ways to come up with different financing vehicles. But I think for right now, the ability to get yourself off the ground with your own money. Now, you should be very, very creative with resources, right? Tap into your friends, tap into local colleges, take advantage of interns, like get an advisory board, try to build people around you and things around you that allow you to take advantage of as many resources you can take advantage of, because obviously you want your money to go to the best use.
Thank you, Michael. Great. I'm in this process around money on loans and so confused. Is there help on creating an income statement or balance sheet?
Sure. We're happy to help, John. Connect with us offline. The key thing is not creating an income statement and balance sheet. You can go into Excel and say, here's my revenue, here's my expenses, here's my net. That's okay. But ultimately, you've got to have an accounting system, right? You got to have a way that accounts for all this stuff. And it's not that complicated. When you set up these accounting systems and you do the stuff that every time you have an invoice, even if you have one invoice and you have 5 expenses, but when you put it in there, then you get to press a button and it creates income statements for you, right? So that's why you put in place those foundational things. We've all got them in a notebook somewhere, but that doesn't, make lenders and financiers particularly have the warm fuzzies.
Yep. Samantha, I don't know if you can hear me, but do you currently have an accounting system that you use?
No, hello.
Hi.
Hi. No, I don't have an accounting system that I use.
Okay.
Right.
So I didn't even know. I'm so new in this process that I'm still learning. About all of these things. Yep. And trying to get the information on how to better keep up with my finances. So.
Mm-hmm.
Yep.
Absolutely.
Well, you are no longer a local entrepreneur. Welcome.
Well, what platform should businesses use?
So there's a couple that we like, Wave, Zero with an X, Xero, and FreshBooks. But we're happy to connect with you offline and try to help you, think through it. But there's a couple of good ones. They're really inexpensive too. Some of them are free for one user and really inexpensive. So happy to help.
All right.
And Samantha, actually, another question, Michael, a follow-up. How can you increase your personal business credit quickly, and what scores do they typically look for when applying for a loan?
Yeah, when you're an early stage company, a lot of times banks, even though they're looking at the business, they're looking at you personally, right? And your credit score is super, super, super important to that. Obviously, ones that start with 7s are better, right? The things that are up in the 700s. And this can be something that can obviously have a detrimental impact on loans. I think getting credit cards early, paying them off regularly. Sometimes people do this with kids, right? They give them credit cards in high school and they literally make them start charging and make them start paying off, even though they don't need the credit cards, right? Because they're trying to build up credit. One thing you should definitely do though is almost all of the big banks, if any of you have your money at any of the large banks and have banking and checking accounts there, a lot of them have free credit scored programs there now, where you can go on through the bank. I know Bank of America has this. Go through the bank, you can get a credit score right there for free, and it tells you what a lot of the problems are, and you can actually contest and explain old things, so they'll take it off your credit right away, right? So obviously the best way to get credit is to be good credit, but in addition to that, it's monitoring your credit score, and a lot of the banks, you can go to, Experian and others, but I think Capital One, Bank of America, even if you're not a customer of those banks, sometimes you have to be a customer and sometimes not. But a lot of times you have to dig in and challenge things from the past and try to explain them. And sometimes it'll just, your credit score can go up, right away if you challenge some of those things.
Great.
Excuse me, I wanted to interrupt real quick. I'm driving, so I can't text, but I wanted to tell the last lady I was using QuickBooks for my accounting, and it's pretty easy to self-manage. And I use Credit Karma and Sesame Credit, I believe it's called. Mm-hmm. And then Wells Fargo gives you your FICO score every month. But Credit Karma is not 100% accurate, but it still gives you a layout of everything.
Great. Thank you. Where are you driving?
So I am a heavy machine operator. I operate over here off of First and Greenfield doing the foundation for the new Komatsu building that they're doing.
Awesome.
Wow.
Yeah, and I'm the owner of Outworking Tea too. That's what inspired me to create my business.
Awesome.
So yeah, that's why I didn't text it. So I just wanted to say that before I forgot it.
Thank you for sharing that.
Yeah.
Great. Okay, and I have so Michael, I have a couple of more questions.
Yep.
This is a funny one. How do you find angry investors?
How do you find angry investors? That's funny. The way you find angry investors is you tell them you're going to sell $1 million in sales and you do $500,000 in sales. That's how you find.
Why do you want angry investors?
Well, you don't really want angry investors. You want investors that you overperform for and want to give you more money. That's what you want. So is there a quip behind the question?
Yeah, well, no, I was trying to say angel investors, but I'm visually impaired, so that's what happened. I pushed the wrong correction.
That's pretty funny because that's actually like a question that an entrepreneur would ask. How do you
Right.
find an investor? So you're.
That's
I
funny.
want them to be happy.
Where are you from?
I'm in Houston.
Gotcha. That's really funny. So how do we find happy angel investors? Every city and virtually every industry has angel networks, right? So if you just go in Houston and type Houston angel networks, there are these large networks in which you can normally search a database on all of these different angel investors, and it'll tell you how much they normally invest, what industries they invested in, and what companies they've invested in. And then you have nationwide ones like AngelList and others. So pretty easy to find, different types of investors and what they're investing in.
Yep.
Can you help us with the PPP to start the like a startup business? Can PPP help?
Well, typically for PPP, you have to have employee costs, right? That's why it's called the Paycheck Protection Program. So if you don't really have those costs, it's a little more loose than it was. Do you have employees, or you're just starting?
I'm just starting. I've been struggling. I don't have the finances, but can they not take me as one employee like the SBA webinar I went to said? Yep. I can be one employee.
Yeah. What I would suggest for your type of business, the PPP is not normally the best fit. I think that looking for some of those grant programs that I mentioned, right? So if you go online and search where are you located?
Jacksonville, Florida.
Yeah, so I would look in and around Jacksonville for grant programs for businesses, whether it be in that geography or in the business the area you're trying to start, whether it's healthcare or a restaurant or whatever it may be. There's a lot of those programs that are out there.
Okay, I missed the grant. I missed when you started giving the grant. Can I email you and you send me the grants?
Yeah, what I would do is just go and Google, Jacksonville area grants for small businesses. And that will give you kind of whatever the grants are available in that geography.
Okay.
Okay. We don't have them for every city though.
Okay. Thank you.
Cool. Thank you.
Great. Folks, just a quick reminder. So Jamara, one of our team members might be dropping a text into the chat here for you specifically. Just keep an eye on it for your email so that we can connect and continue the conversation. All right, Michael, another question. Joan, this is a great one. I have a bank that I've been using for over 15 years. And when I went to them for a loan recently to grow our label business, they told me they don't loan to entertainment companies. This is one of the largest banks in the country, Chase. And then also we have a restaurant and we opened on 12/31/19, so right before COVID hit. We're trying to get funding to put in a commercial kitchen, but we're having great difficulty because we have not been open long. We were even turned down for EIDL because they said we were not injured enough. So
banks lend to entertainment companies all the time. So I'm not really sure why they would say that's the case. I mean, if you told me at a really small bank in a certain place, but if it's one of the big ones, they do. Listen.
No, this is somebody that you've been using for 15 years, right? So you have an established relationship with them.
Yes, absolutely.
Where are you located?
In Illinois, the Chicago area.
Yep. As far as your business, in terms of the performance of your business, is your business making money, does pretty well cash flow wise? Like how would you describe your business financially?
Yes, for my label it is, and we were working on 2 projects, and we've never gotten even asked for a loan from Chase, but
Yep.
I've been putting millions of dollars through there over these
Yeah.
15 years, and then for them to say that they don't even lend to entertainment companies was a blow.
Yeah, that's not true. That's not true. So what I would do, and we're happy to help you with this. What I would do is I would go to your relationship manager and say, hey, I have all this business with you. I don't want to move my business with you, but this is not really the way that I expect to be treated. If somebody evaluates us and they don't think our business is good enough, right? If they think the financials are okay, that's what we've been talking about. But I would say, I'll give you the opportunity to do this, but we're a profitable business. We've been successful. You watched this over a period of time. I'm just going to move my money elsewhere. And if you're bringing millions of dollars and you've got a profitable business, there's 50 people we could call for you tomorrow that would be thrilled to have your business. So let's talk offline.
Yeah, because the thing is, in the entertainment business, and you might know this, Michael, things did a downturn for us, right? So it's no longer millions like it was, but we've never been in the red with them or anything. So my revenues have definitely gone down over the years and now starting to pick back up.
Right.
But they were never in any type of position where we were running good money through there. And then for our restaurant, we just recently opened again with Chase. So I put that with them too before they decided that, they're just happy to get the money's coming through, but they don't really want to help these businesses.
Yeah, listen, I think they're different situations, right? Your situation with your restaurant business is new. It doesn't have a proven revenue stream. That's a little bit more challenging. And so that's where you might look to grant programs or use a publicly available commercial kitchen. We can talk about strategically that. But your banker that you've had significant dollars with and a longstanding relationship, there's plenty of companies that they finance. The fact that they're not really willing to look at it is probably just a function of your local relationship.
Okay.
So let's talk and see if we can change that, not only at Chase, or if Chase doesn't want to do it, then let's consider another bank.
Okay.
Okay. Remember, one of the things that you guys everybody can probably tell, we really try to think about you guys and think about how do we help and, as Victoria liked to say, represent the soul of the entrepreneur, right? So there's a lot of things that people are told by vendors all day long. And a lot of these vendors are very well intentioned, but some of it's salesy, some of it has your best interests at heart, some of it doesn't understand your business. So these are the exact types of questions we're happy to help you guys with. So we'll connect offline. Of course.
Okay. Another one, Charlie, this is a good one. How about Dun & Bradstreet? Is it a must-have? Is it worth paying for to monitor your business credit?
It's an interesting question, Charlie. I think the answer was probably, 15 or 20 years ago. It was one of the things, just like, Better Business Bureau ratings and stuff like that. I don't think it's as important. What I would probably do is maybe wait till it gets asked for. Like you might get asked for it in a bank loan. You might get asked for it in another setting. You can always go get it, right? Because they're going to pull the same data everybody else is pulling about your credit score and stuff like that and the rating of your business. So is it a must? Probably not as much as it is. But when you do go get it, obviously it all depends on your credit. So I don't know if Charlie, if you have a different view of it. I mean, kind of think it was more important many years ago. Oh, maybe we lost. It's okay.
I'm mute.
Oh, sorry. No, I have.
Charlie, you sound like you're millions of miles away. Come back.
Okay, how about now? Is it better?
Nope.
Well, no, I just want to say that I agree with you, Michael. I just wanted to get a confirmation from you that I was on the same page. That's all.
Yeah. No, I don't think people look at a business. I certainly don't look at a business. And if I went to a web page and it doesn't say something about Dun & Bradstreet, I don't think anybody's looking at that these days.
Great. Ariel, Outwoken Tea. Just saw your note.
Okay, thank you for calling on me.
Of course.
Yes, this may be a little off topic, but it's within topic. So
Mhm.
I have been pitching my business, like with Generator 8, Fund Milwaukee, different organizations that allow me to pitch on their platform. I was wondering, out of curiosity, when you, from your point of view, when you are looking at a business that is pitching, what are
Yeah.
some of the key points that you're looking at as an investor in order to invest within this business? That, of course, I am a startup. I started in June, but I have scaled it very significantly.
Yep.
So, because I feel like I'm always so close, like I'm in the top 20 or in the top 10, or like I get really close, but no cigar. So I'm just wondering, like, what is some key points that you think that would help me to access these financial opportunities?
Great
Sure.
question.
Great question. And I know we've got other sessions we've done on this in the past, so we'll get you some of those. So when I think about investing, I think about, 5 things, and the rest of it doesn't really matter unless you get these 5 things. Number one, do you have a meaningful market? Like, is there a big enough market that you're going after? Number 2 is, do you have some unique approach to that market, right? You've heard us all, for those of you who've heard us before, finding a playground where nobody else is playing, having a unique positioning in it. People want to say, okay, it's a big market, but if it's a big market, multiple people are going to go after it. Do you have a playground where nobody else is playing? Do you have a unique set of know-how about this particular area, right? That's number 2. Number 3 is any element of traction, any element of validation. Everybody goes in and says to investors, I'm awesome, right? But if you have customers that have bought your product, you've gotten your name in the paper, you've had talented people with cool backgrounds have joined your company, if you have a great advisory team, right? All of those things are validations of your traction. Okay. 4th is the team, right? Investors look at, who is the group of people that I'm giving this money to? Now, the first question that always comes to mind is, well, okay, the reason I need the money partly is because I need to build out the team. So how do you do that when you don't have the money yet? That's where we're, for example, creating a great advisory board of people that are seasoned people that, you may not have to pay anything. Maybe you're giving equity to, can help round out the team. But the other thing is saying, with your money, right? We've done this on our own, right? And we've done these good things on our own. But with your money, we're going to go hire these team members. Okay. And then finally is your business model, right? You mentioned scalability, the ability to have a business model that makes sense, right? If you're like, well, I'm going to make cookies, and I make 1,000 cookies, and for every 1,000 cookies, I make $4. Someone's going to be like, you got to sell 1,000 cookies, you got to make 1,000 cookies, you only make $4. So your business model. I think overall, it's really number 2 that really stirs the drink. Do you have a unique approach to the market? Because everybody goes, all of us included, everybody says, with competition everywhere and everybody can get everything cheaper somewhere. So how do you win? And investors see tons and tons of deals that say we have the best mousetrap. You've got to be able to come to the table with a playground where nobody else is playing, a unique set of know-how that ultimately makes the difference. So that's what makes people invest in companies.
I agree. And thank you so much for your input on that. And I think when I pitched, I was truly thrown off by a question when she was like, what makes you different? And when anyone else asked me, I know it off the top of my head, but for some reason, when they asked me, I blanked out because she said it with like such an attitude that I forgot what I was going to say. But no, I agree with you. I agree. Thank you.
Well, remember that the job of the leader, you guys, in these scenarios is you have to understand that people are going to interrupt you. They're going to say they've seen your business 100 times. I mean, in one sense, it feels like they're calling your baby ugly, right? And that's, that's just part of doing what we all do. You just have to take it in, go slow, don't be so quick to answer. But you want to have a true playground where nobody else is playing, right? And it's not, and this is a super important point, it is not the quality of your mousetrap, right? So many times founders, we're so invested in the thing that we've built and we understand in our own mind why it's so important. We tend to describe the it, right? Well, it's this, it's this, it's this, it's this. And every investor says to themselves, everybody can always build a better it. There's lots and lots of money out there, right?
Very true.
Right. So it's not, and remember, we're so invested in what we've built and we think it's unique and we know it is unique, but investors are like, okay, it's not the better mousetrap. Like, think about it. I don't know how many of you are runners, but back 20 years ago, there was Nike and Saucony and Asics, all the running shoes. There's more, but some of the main ones. And if you asked 100 runners, 90 of them would say that if you were ranking those, Nike would finish last, right? And yet Nike sells 100 times more shoes than those two companies combined. It's not the mousetrap, right? It's the unique approach. Now, what was their unique approach? They were like, just do it, right? So all of a sudden you felt if you got a Nike running sneaker, even though it might've been deficient to the others, you were going to just do it, right? So it's your playground, right? And how you position yourself and that resonating with investors, right? It's not necessarily the mousetrap.
Or as you say, people, they buy with emotion, they don't buy logical. So many people are thinking just logical, but they don't have any emotion behind it for people to grasp it.
And a lot of times, sometimes it's emotion, but a lot of times it's just thinking through the unique positioning of it. So I'll give you an example. There's a company that was creating gaming technology that would allow you to bet on all kinds of different things, for example, in a football game, things that you weren't able to really bet on in a big casino. And they went to DraftKings and they went to the other large, the names escape me, the big betting companies. And they went to them and they're like, and they were talking to investors and they're like, DraftKings doesn't have this technology. And we're going to be able to take bets they don't take. And my reaction was, well, but DraftKings has $1 billion, right? They may not do it today. DraftKings gives somebody $500 to sign up for an account just to bet the first time. Like I understand they may not have the technology today, but they could tomorrow. To say you're going to beat DraftKings because you have a better mousetrap is highly unlikely. DraftKings might even be able to go to a state legislature and say, you shouldn't be able to bet this way. So we're like, how do you find your playground? So this person was an MIT grad. They were talking about the better mousetrap. And I was like, we started talking about the market and we started to realize that the traditional casinos like Las Vegas were getting killed by the DraftKings of the world because people were no longer going there, even pre-COVID. So we said, why don't you go to them? Because they really need something like you. They don't have a digital solution to go bet. And so all of a sudden they went from being, hey, not that interesting, to they are the strategic enabler of casinos being able to compete against their top competitor. Okay. It wasn't about the it. Okay. It's about the unique approach to the market. And then when you hear that, you're like, oh yeah, the casinos need that. That's a unique approach to it. So for what it's worth.
Awesome.
Victoria, do we have others, or I know we only have a couple of minutes left.
I know. I think on my end, I think we've answered all the questions that I had.
Great. And a couple of things that I want to just, and it's a good way to round out the discussion because there's a difference between equity and debt, right? In our section in our learning community, there's under raising money, there's a learning module called the different types of investors and one called the different types of investments, debt versus equity. It does a pretty good job of explaining the differences. And again, don't have to learn all this, but just so you guys can get some information. When it comes to debt meaning getting a loan of some type, right? It's pretty much the numbers. You might get a banker excited about your business. They might be emotional about your business. They might think you're a good person. It's going to be your financial statements, your financial plan, your credit score, right? It's going to be about the numbers. When you're talking to equity investors, and these could be, seed capital, angel investors, certainly venture capitalists, they know that a lot of these early stage businesses don't have a track record yet. They're not looking at that, right? They're looking at potential and opportunity. So they're much more likely not to require, okay, you have to have 3 years in business where you're nailing it. That's great. But a lot of early stage businesses about them seeing the, for lack of a better word, opportunity, right? The opportunity is, do I have a market size? Do I have a unique approach to the market, right? And those are approached differently. Okay. One thing I want to comment on before time runs out when it comes to bank loans specifically is a lot of times they're looking for collateral. And for those of you that aren't familiar with collateral, that is some type of asset that they can have a lien on, that if for some reason you default on the loan, that they can take, right? Now, if you're an established business, that collateral could be your inventory. So take the example of a restaurant. That collateral might be, the oven and the equipment, right? As we all know, though, in many early stage businesses, people don't have collateral, especially if you're a technology business, right? What collateral do you have? What people do sometimes is the collateral they end up using is the equity in their home, right? Is they'll go to a bank and a bank will say, okay, I'll give you 100 grand, but you don't have any collateral, and they'll take a lien on your house as the collateral. So these are obviously really personal, big picture decisions about whether you're going to do that or not. Obviously, you want the business to stand on its own and not to have to do that. But collateral is something that oftentimes makes it hard to get loans, and that's why these, especially in this day and age with COVID, there are more and more funding sources that recognize the reality of 95% of the businesses that just start aren't going to qualify for a loan. And if that's the case, if you're opening up a new restaurant, where are you supposed to go? Lots of restaurants, maybe they're angel investors that invest in restaurants. There, of course, are some, but a lot of times there's that gap. So there are more and more grant programs, more and more loan programs that are micro loan programs by special types of companies that are designed to try to put together a whole bunch of stuff.
Michael, there's another question. Is it easier to obtain a loan for 50K franchise re-up fee for a 9.5-year-old business than for other types of loans?
Any businesses that have proven track records, and those track records are good, it's easier, right? And in that case, if you're re-upping for a franchise and you say, okay, this business has performed, over the course of these years this way, those are easier because the numbers speak for themselves. Yes, they'll be concerned about COVID and they'll want to understand how COVID has had an impact. But I think for those types of things, what it's used for, a re-up fee, re-up fees aren't great to use them for because it doesn't go into the business. Typically, they want the loan to go into the business. So they may want it to be part of a bigger package. Because the money's not going to the business, it's just going to the franchisor to re-up. Okay, but if you have a track record that can support a certain amount of loans and you can spread that over time, then hopefully the $50,000 isn't so big that that is detrimental.
I just wanted to say real quick for anybody who wanted to get a loan and was having a problem at the bank, I got my first loan through Rework. So they help startups and they also provide you resources like training on SEO. They have marketing Mondays, things like that, all for free to anyone who gets a loan for them.
Great. Listen, everybody, these are really complicated topics. We understand that you don't just kind of jump on and be like, okay, I got it. We're here to help. And I think that the one thing I want to make sure people understand is that these foundations that we're talking about are essential to get loans from third parties. When you walk in the door, they're going to expect this stuff from you. And the more you start to put those in place for your business, and these accounting packages are good ways to do it. The two other things I want to mention before first of all, it's great to see people from Milwaukee, Houston, Jacksonville. Anybody raise your hand if you're from outside the country. We always like to say hello to our people outside the US. Couple of things. You'll see the survey we send around each week to try to continue to do better. So if you do get a chance, please fill that out. It only takes a couple of minutes. It helps us serve you guys better. And then secondly, one of the things that's coming at the end of April into the Lonely Entrepreneur Learning Community, two things that are actually coming is, number one, we're going to be putting in there different sources of financing, right? So as we become aware, which we often do, of many different sources of financing, in addition to learning modules, you'll be able to take advantage of getting access and seeing some of those sources of funding. And also vendors. We're going to be putting in there a series of vendors that we have worked out deals with that will run the gamut from, web hosting and all those types of things. And coming in the not too distant future after that are vendors that we have vetted for you, right? So these are lawyers, accountants, marketing companies, technology development companies, where we have put them through a process and essentially said, unless you go through this process, we're not going to be comfortable recommending them to you. So again, all things that are coming in the not too distant future, and we'll keep you right and posted on everything. Victoria, anything else?
Okay, Samantha, why don't we connect off topic, and then we can talk about this. Made another question. I think that's it. I think we've answered a lot of good questions here.
Remember, everybody, every one of these sessions are recorded and put into the learning community. If any of you don't know how to get access to it or find it, please feel free to send us a note. I know Victoria's been posting some things, and I hope this was helpful for everybody.
All right, and we'll see you guys back here next Friday. Hope everybody.
Bye, everybody. Have a terrific day.
Bye. Nice to meet you guys.
Likewise. Thank you.
Thank you. Bye now.
All right, Michael, hang on one second.